All right, let's just get started. Big thanks to everyone that's joined us. Um, we want to talk a little bit about the topics and structure of the space. We're here to talk about Genius Yield's roadmap, our progress on our smart liquidity vault, and our partnership with FluidTokens. At the end, if we have time, we're going to open up the floor to questions. Please try to keep the questions directed to the subject of the space. If you have any unrelated questions about the project or anything else, please join our Discord and submit your questions in the Ask Team section. And I will do my best to get those answered. First, let's welcome our guests. We have Dr. Lars. We have Attila, who's a senior software dev here at Genius Yield, and Raul from FluidTokens. Can you guys all give us a short introduction of who you are, what's your background, and anything else you think is pertinent? Let's start with Lars. Lars, can you tell me about yourself?
Yes, thank you very much. Thanks for the invitation. So I'm Lars, I'm German. My background is in mathematics. I have a PhD in mathematics, and I started getting involved with Cardano in 2016, joining IOHK, now Input Output. And I've been the director of education there, and I still am. And some years ago, then I co-founded Genius Yield, where I am the CTO.
Awesome. Thank you, Lars. I don't think you really need an introduction, but that's great. And how about Attila? Can you tell us a little bit about your background?
Yes, of course. Thank you very much. So I'm Attila Bujaki. I'm a senior software engineer at Genius Yield. I have been with the company since quite a few years now. I have a classical software engineering background. I had been working on many different bigger and smaller software projects, and I'm glad to be part of this incredible team. And thank you for the opportunity to be on this space as well.
Awesome. Thank you very much. And last but not least, Raul, can you give us a little bit of your background and a summary of FluidTokens and your unique project that you have on BTC?
Hey everyone, yes, I am Raul, CTO at Fluid, and I am based in Switzerland. I was born in El Salvador, but I grew up in Italy, so a bit a mix of everything. And I started to study and work on Cardano almost 4 years ago. And I joined Cardano when there were no smart contracts on mainnet, and I've been a witness of the amazing journey that all of us have been taking, and happy to be building on Cardano and happy to be building on UTXO in general, also on Bitcoin.
Awesome. Yeah, it's very exciting to see how the ecosystem has matured over these last 4 or 5 years. I mean, last night we hit 1 million TPS on Hydro with Doom, and that's very impressive. So it's great to see the maturation between having Cardano with no smart contracts and then having smart contracts, but them not necessarily working the way that we envision them to what we have now, which is much more expressive in my opinion. And behind the avatar, it's me. I'm Low Tech Viking. If you're in Discord or Telegram, my name is Michael. I'm usually along with Mary, who's my co-host. We're usually the ones that are addressing your questions on the different social medias. So say hi to Mary. So let's just get in there and talk a little bit about our roadmap and our partnership with FluidTokens. You know, one thing the community is aware of is that placing liquidity on Genius Yield is not ideal. It's time consuming, and if you don't know how to run a market maker bot, it can get a little bit tricky. So, one of our goals has always been to provide an easy way to provide liquidity on an order book DEX, and something that's new, something that's novel, and something that gives value to the community. So we kind of came up with our smart liquidity vault. So can we discuss what the first iteration of our smart liquidity vault will look like and how it will work. I don't know if Lars or Attila, if you want, or Raul, whoever wants to grab this one.
I mean, maybe I can start and the others can chime in. Right, as you already said, I mean, at Genius Yield, we believe that order book is the right model for doing a DEX on Cardano. Due to the UTXO model that Cardano uses, order book just seems to be natural, and we believe that it's more efficient and better for everyone in the end. But unfortunately, of course, it's like new territory, it's pioneering, so we have to like figure things out as we go along. And one of the challenges is how to enable people to provide liquidity. And on the like well-known AMM dexes that we know from Ethereum and that also most other Cardano dexes use, I mean, it's quite simple. People just put money in a liquidity pool, and then they can forget about it, and hopefully they get rewards, which is not guaranteed, by the way. I mean, there are things like impermanent loss and so on, but nevertheless, it's very simple. But it's also very rigid because of the way these AMMs work. I mean, there's this constant product formula. So basically, there's no flexibility in. I mean, it's like you can think of a liquidity pool as like market making if you add liquidity, but it's a very rigid, predetermined strategy. So I mean, you have no flexibility. Everything is automatic, determined by this constant product formula, which is good because it's easy and makes it simple for people to provide liquidity, but we believe it's also very limited because if you look at traditional finance, where which is based on the order book model, market making is like an art or science where you have specialized companies that do it, and so it's basically a trade-off. We believe that the order book model provides much better opportunities for liquidity providers on the one hand, but on the other hand, it's more complex. So that's the problem we are trying to solve, to make it as accessible for our users while profiting from the fact that we believe that it's actually much more profitable in the end than putting liquidity in AMM. So now to come to these smart liquidity vaults, so the idea in general is that basically people put money in a vault and then the vault executes a strategy, a trading strategy, a market making strategy. And of course, it's supposed to be secure, so nobody has access to the user's funds except the strategy, and all the strategy can do is place orders and cancel orders. So that's the idea, and in this idea, there's also like a big design space. So it can be quite simple with very simple strategies that are very similar to what AMMs do, or it can be completely flexible. So in principle, we can have strategies that would allow anything. I mean, that could deploy AI, for example, and do whatever. I mean, arbitrary placing of orders, canceling of orders, and so on. And so we have to find like a compromise between simplicity and speed of development on the one hand, and of course efficiency and profitability on the other hand. And so probably the first version we will have will only allow like simple strategies, like placing orders in a spread around the current market price, which is similar to AMMs, but still more flexible, we believe, because people would still have the freedom to, for example, set some parameters like what spread they want to use. So that's probably the first manifestation of these smart vaults that we will come up with, but we are also working in particular with FluidToken on this completely flexible solution. And the goal, as I said, is to find a balance between ease of use for users on the one hand, but also power and profitability on the other hand.
Awesome, thank you. So that's a really good summary of what we're trying to do as far as like a big picture idea. What about how we're going to accomplish this? Like what does it look like? What does the first iteration look like? How will it work? I don't know who would be best to answer this one, or if someone wants to add on to the last question.
Maybe I can just briefly say that independent of these strategies, it requires like a smart contract for the vault that basically guarantees that all the vault can do, or the strategy can do, is place orders and cancel orders, and that guarantees that people can retrieve their funds at any time. So that's the first step, this smart contract. And we probably also need, or actually we are already working on a smart contract to extend or improve our existing order contract, because one challenge we have with our existing order contract that we noticed is if the price moves and you want to place your order at a different price, you always have to cancel the order and then like place it again, which always comes with costs. I mean, it's low, transaction fees are low, but of course it accumulates over time if you do frequent moves. So one of the improvements that we are working on is to basically have like a dynamic order that is tied to the market price. So instead of saying I place this order at this specific price, you can say I place this order at whatever, 1% above market price. And then if the market price changes, you don't have to touch the order, but you can just leave it there and basically the price automatically adjusts. So that's one smart contract we are already working on. And I believe we actually already have a version of that. And we also have designed this vault contract. So that's the one side, the smart contract side. And then the other side, of course, where in particular FluidToken comes in, is to actually develop strategies that make use of this infrastructure, this technology, to then intelligently place orders and cancel orders.
Yes, exactly. I would like to add that this is actually a very good example, and also a very good DApp and application in this moment on Cardano, for instance. And you may ask why. Well, when you create liquidity, a liquidity pool, I think that all of us have experienced the fact that when, even if you are farming, if you are getting fees and so on, you are actually taking out and externalizing what is your catalyst power, what is your G-rep voting power. And what we are trying to achieve here is a design where you are able to provide liquidity in an easy way, in a order book DEX, and trying to achieve also the possibility to keep your ADA staking rewards, therefore your catalyst powers and DREP powers. Because in this way, while you are actually farming on the DEX as liquidity provider, you are, if your order is there sitting unused, you are actually getting staking rewards. And on top of that, the strategy that you are able to get using an order book model is better than an AMM in the mathematician sense, meaning that in an AMM you have impermanent loss for the constant product formula. In an order book, you can tweak and play around with the formula that your strategy is about, and therefore you can minimize at the minimum the loss. And as Lars was saying before, imagine a huge spike in the price and you have to cancel your order and do it again. But what if this order is automatically tied to that price? So you don't have to worry about it. You just have to check maybe if it's filled or not. That's all your concern.
Very cool. Attila, do you have anything you'd like to add to this?
Yes, I have a few remarks. One of them is Raul. I think there are quite a few people who are with technical background, and also partially to Lars, because in the last months we have explored quite a few different options how we could implement this solution. And I think it would be very interesting for the community to hear what options we explored and what led to this decision that we go with this particular one. But maybe first to Raul, could you please tell a bit about the technical details of this proposed solution?
Yes, absolutely. So first of all, we should say that we had a great innovation in the Cardano smart contracts ecosystem, meaning that what is possible now, it was not possible when Plutus V1 arrived. For instance, and I think that not many projects are leveraging yet enough, is the fact that you can have smart contracts that can act as wallets now. Before, if you send some funds to a contract without using Datum, those funds were lost forever. However, right now, you can actually create these smart contracts and say, look, I am the owner of this contract, and maybe add some rules to it. And whoever can send payments there, and if the rule allows me to spend them, I am able to do it basically using it as it was a wallet of mine. And essentially, using this approach, we can forget about the smart wallet thing for one moment, and we can think about a smart vault instead, where I am able to deposit my funds, or together with other users, I'm able to pool my funds. And the rule in this case is the type of strategy or the type of orders that I allow to do to that vault. In this way, from my perspective as user, as a liquidity provider, the only action that I did actually was providing liquidity. But on the other hand, the smart vault that is connected with the strategy and with the orders is able to perform all the technical stuff that so far was delegated to market maker bots, for instance. And as total outcome, the result is a better experience, both for me as a liquidity provider, but also for the user on the other side, because on the other side, users will find more liquidity providers, therefore more liquidity, and therefore a very user-friendly user experience.
This sounds really great. Does this compare in some way to a kind of on-chain actively managed fund?
Exactly. In a similar way, I think that we can compare it with what happens right now on a centralized exchange, for instance. On a centralized exchange, you have the liquidity there. However, you are trusting them. You are trusting a centralized exchange, and you hope that they will behave with your funds and so over. But what if you could actually use an order book, like a centralized exchange, where you don't have to trust the order book that is behind, because there is a strategy that defines exactly the boundaries of these rules, and therefore you remove that trust approach in a very blockchain way, and you are able to perform whatever strategy you want. So yes, your comparison is actually very accurate.
Are there going to be some kind of incentives for these funds, for the managers to do good service and have good yields, or are there going to be some mechanisms that make sure that bad actors won't try to and cheat the system to drain funds?
Regarding the yield on top of for the liquidity providers, I think that it's a very good approach, because in this case you can have, well, first of all, you have the basic staking rewards as for liquidity providers, since you are deploying ADA. On top of that, you are getting fees for the swaps, and you can even profit, because the price that you are setting as liquidity provider can be a little higher than the average price. So in case of high volume, you are actually selling or buying at a better price. And this, just by that, you are getting, let's say, revenues from that. Besides all the swaps that are trying to minimize the impermanent loss. So in case of a huge change in price, you are not losing money in that case. And on the other hand, what you said about evil actors trying to steal funds, I think that this is the the cool thing about smart contracts, when you audit them, when you check them, and when you set the boundaries, evil actors are not going to be able to steal funds because these rules are on chain on the contract. And also there won't be possible, for instance, for users to kind of, let's say, manipulate the price, manipulate the market, and so on. And to add on top of that, why order book is a good incentive for a project. If you check right now the amount of ADA that is deployed by projects for providing liquidity, I think that we can fairly say that we are over 50 million ADA in general as average. And these projects are not getting ADA rewards for this ADA, and are not getting the capability of having strategies for their funds, or having something more flexible than a simple constant product formula. And in this way, I think that if a project is capable of deploying liquidity in an easy way, and also provide a strategy to protect the users, the community, but at the same time to even profit from volumes and create another source of revenues for the project itself, both the community and the project are going to be happy.
Sounds great. I'm really looking forward to see these sophisticated financial instruments working on chain. It's really crazy that all of this is possible now. Lars was aware of the studies and research you did with the blockchain team regarding the different approaches that we could take here. Could you please elaborate a bit around this topic? Like, I know that there had been several other possible solutions that we investigated. Are we gonna eventually implement other solutions as well, or this is gonna be the preferred one for now?
Well, I mean, as I already mentioned, the design space is quite big. So, I mean, on the one axis, you have like security versus flexibility. So on the one end of the spectrum, you can have a on-chain solution where everything is done by smart contracts, where even the strategy is encoded in a smart contract. So that would have the advantage that it's completely trustless. But on the but the disadvantage that the strategy can't be arbitrarily complicated. And then on the other end of the spectrum, you have something where the strategy is completely off-chain. So users need a certain amount of trust. I mean, they must trust that the strategy is actually like solid, and that actually the strategy does what it says it will do. But then you have the full advantage. I mean, you can do everything. You can use whatever price information. You can use artificial intelligence. So that's the one axis we were looking at. Another axis is should it be one vault per user, basically? So if you provide liquidity, you put it in your own personal vault, which has certain advantages. Like, for example, it makes this staking easier that Raul mentioned, that while your ADA is locked in this vault, it can still earn you staking rewards. It can still give you DRA power. But on the other hand, I mean, the liquidity is only as big as what you yourself can provide. Or alternatively, it's like communal vaults, as we know from AMM dexes, where you can add liquidity to an existing vault, which makes the staking a bit trickier, even though that's also possible, I believe. But on the other hand, then you have much more liquidity to work with. And of course, the more liquidity you have, the more possibilities you have. And to answer the last question, I think, I mean, we want to start with something simple because we know community has been waiting for this for a long time, but then definitely also go for more complex and sophisticated solutions. But I think the goal is to get something out as quickly as possible that provides use. I mean, that's attractive for users so that people can start providing liquidity. And then once we have that, extend it and make it more flexible.
Sounds great. As a person who had been supporting the market maker bot operators, I can confirm that the community is really looking forward to a solution that opens up this to a bigger crowd. Quite a few members of our community would be really happy to see this working, of course, as soon as possible. But there is this one thing regarding the price information. I'm just wondering, don't we have eventually some issues around price manipulations, especially since some of these liquidity pools are not as big, so it could be a target for price manipulation. Had you been investigating this topic?
Yeah, that's a good question. So ideally, of course, we would take the price from the DEX itself as, for example, Uniswap does it. I mean, one of the features of Uniswap on Ethereum is that they, as a basically side effect of their operations, they get a price oracle. So that would be ideal. But as you say, because the volume at the moment is not very high in Genius Yield, that's problematic. It's also problematic for other reasons. Because I mean, one feature of Genius Yield is that in contrast to, I mean, at centralized exchanges in an order book, you can't just fill arbitrary orders. You always have to fill them in order, given by price. And Genius Yield doesn't have this feature, which makes price establishment or price calculation based on our index problematic. So at least in the beginning, we will probably rely on external sources like tab tools, which basically looks at all of Cardano and makes it much more difficult to manipulate. But I mean, eventually, of course, the goal would be to have like something that's completely intrinsic to Genius Yield.
Great, Lars. Thank you. I'm happy to know that this was investigated and you made some thoughts about it. It's important to keep in mind that this whole topic is not really resolved in traditional finance neither. There are these reports of price manipulations of big financial institutes again and again. So this is something that's actually still present in traditional finance as well. So I think it's not an easy issue to tackle, but I think we're on a good path here. Raul, do you have anything to add around the on-chain price feed and the different price sources?
Yes, I would like to add two things. First, for instance, when you were asking about all the investigation that we did, there were actually some papers that I will probably share with the community in the next days that were kind of interest because I lost completely a weekend reading all these papers and because they were really interesting. And the interesting part was this. When you have an order book model and an IMM model, can you kind of make them similar? Meaning that can you make an order book model behave like an AMM? Or can you make an AMM behave like an order book model? Well, the cool part was that it is actually possible, and meaning that if you get an AMM and change the formula behind it, you kind of behave like an order book. And at the same time, if you get an order book and use a strategy that is similar to an MMM, you can replicate what is there. But what does this mean? It means that with a good strategy or a different strategy, you can have your order book DEX behave with different approaches. We have seen Unisat. Usually, there are, I think that Unisat V3, or maybe I'm wrong, released a new kind of liquidity provision in IMM. It's the balancer, something like that. And this means that if you create a contract that is based on strategies, that contract is very flexible because you can upgrade, integrate, and create new strategies, and at the same time behave like other models that are good for liquidity provision and better in terms of slippage, for instance, or in terms of impermanent loss, and so on. And on the other hand, for the question regarding the price feed, I think that it's a very good topic. We were discussing internally for fluid reasons, for instance, if using DEXs, if not using DEXs. And sometimes, as Lars was saying, trusting only one DEX, even if it's on chain, is not enough. Why? Because if I trust, let's say, only one DEX for a specific token, what happens if the project or the users change DEX and move the liquidity to another one? If I am a project that is using that DEX as feed, as price feed, as soon as they withdraw the liquidity, that price is going to be completely unpredictable because there will be low liquidity and so on. And if my project relies on that price, that means that that could be happen something bad to the user that are using my platform relying on that. So the best approach is trying to aggregate from different sources and even trying to differentiate, like not just aggregate different sources, but even different providers. I want different aggregators that provide me the feed, because if one aggregator fails, at least I have others feed to compare and to double check if everything is all right or there is something wrong. So yes, this is my feedback regarding that.
Oh, thank you. Regarding your lost weekend, I think it was very well invested time, and that's also an incredible experience when you're lost in a topic with such a enjoyment that time just flies. And thank you once again for your answers. Regarding liquidity on Cardano, although it's picking up, but I'm wondering if you have some feelings around topics like the Bitcoin OS and the trustless bridge that we are seeing. Is this something that could bring liquidity to the DEXs like Genius Yield on Cardano as well?
This is sorry, Lars.
Sorry. Yeah, I just wanted to briefly say definitely. I think that's a huge opportunity for Cardano. I mean, Charles, I'm in Buenos Aires at the moment at the Constitutional Convention, and listen to Charles, one of Charles' speeches. And I mean, he says that basically Cardano will be the DeFi layer for Bitcoin once we have this bridge. So, and Bitcoin, of course, has like insane liquidity. So the hope would be that Bitcoin people that want to participate in DeFi make use of this bridge and then use the DeFi capabilities of Cardano. And obviously, we hope that Genius Yield will in particular profit from that as well. So I think it's great times to be in DeFi on Cardano.
Incredible. Sounds really great. Do you have a feeling regarding timelines and adoption?
I'm always careful with timelines, but I don't think it will be long. I mean, probably a few months, I suppose. But yeah, I'm always careful with timelines.
Yeah, that's understandable. Thank you very much. Do you have some comments about this topic, Raul?
Yes. So the question is actually very good because everyone is happy about this integration, but what does it really mean? And I think that the best example for why it can bring a lot of liquidity on Cardano is this. Right now, on the Bitcoin side, you have a good community. Finally, they have hot wallets that can interact with the dApps, even if there are not that many dApps. And all this liquidity that is locked inside these wallets right now is not doing that much. It's just interacting, trading some NFTs right now, and but the cases, the use cases are very low, and the reason is that they don't want to use multi-signature bridges to go over layer 2s, even if there are so many layer 2s with a lot of liquidity, and therefore they are limited. What happens when you remove this multi-signature trust approach? Well, you create a good incentive for the users to explore on the other ecosystem. And on the other hand, what happens if you provide incentives in order to move your Bitcoin over Cardano, for instance? And what better incentive if not a liquidity provision in a DEX? So imagine I am a Bitcoin user, I land on Genius, and I see that I can provide liquidity for, I don't know, let's say Hosky slash Bitcoin pair, or FLDT slash Bitcoin pair, Genius slash Bitcoin pair, because I have Bitcoin, therefore I can provide liquidity. And I am happy because I'm farming on that pool, and I am actually using a DEX that has the speed of Cardano and not the speed of Bitcoin. And yeah, therefore I can see good opportunities to unlock that liquidity that is currently unused on Bitcoin and use it completely on Cardano.
Great. That sounds incredible to have this opportunity to unleash the big Bitcoin liquidity on Cardano and eventually use that for providing liquidity on DEXs like the Genius Yield DEX. You feel that this is in reach in the coming months and years? How do you feel about the timelines and the vision that we should have for the next year? The New Year's Eve is approaching. I think it's time to discuss the plans for the next year. What do you see happening the next year?
Yeah, it's more likely to happen the next year unless there is an unexpected surprise, but that's not the case. Even though I was very impressed by the work of IOHK regarding the Halo 2 zero knowledge verification on Cardano. That was very, very cool and actually allows to create a trustless bridge. So in the same way, there is some work that we as Cardano projects are doing all together in order to achieve this ZK verification using Growth 16. This is the name of the verifier that Bitcoin OS is using. And on the other hand, there is work also on the Bitcoin side, because it's not only about having the Bitcoin users ready, it's also about having an interface and something that is very easy to use. In order that I just connect my wallet, I bridge it over, and I don't even feel that I am moving to another chain. I am still seeing some rapid ZK Bitcoin, and I'm able to use them around. So I would say that as timeline, probably begin or mid of next year is realistic, because I know the team and the people that are working behind the scenes.
Great. Thank you for the insights. I'm glad to hear that you're very positive about the coming months and years.
Yeah, let me
Yes.
just chime in here really quick. Well, before we move forward too much, because I know that the BTC conversation can go on for a long time. We could still, there's still, even when the process has matured, there's still things that Genius Yield would have to do. I believe upgrading to the Plutus 3 script and some other things. But before we move on, I just want to ask a little bit more about the Smart Liquidity Vault. One of the things that people are used to is like the AMM style of providing liquidity, right? So how is this going to look for how is the Smart Liquidity Vault going to look like to a user? Because in an AMM DEX, you convert a certain amount of ADA in a native token, and you buy a liquidity position, which is like constantly balanced. How will this look for like a Smart Liquidity Vault? Will you just be adding ADA? Or will you just be adding token? Would you be adding a bit of both? Is there some sort of balancing component to this?
That's one of the beauties of this approach. that you can do everything, basically, whatever you like. I mean, you can add ADA, you can add tokens, you can add both. I mean, on AMM, you basically have to provide the two sides of the pool in the correct proportion. But a smart liquidity vault will be much more flexible because in principle, it can do everything, right? I mean, if you just provide ADA, it can, I mean, the smart liquidity vault itself can convert some of the ADA into the token if it needs that in order to place certain type of orders. So I think for the user, the experience will be very similar to the experience on a traditional liquidity vault in AMM DEX. I mean, you just put your money there and then you forget about it and then you hopefully watch your rewards accumulating. I mean, what is different is just how that happens. I mean, that a lot more is going on behind the scenes in this vault because basically I mean, it's more like a traditional fund, sort of a hedge fund or something, where people hand over their money into this fund and then it's managed by experts. So that's maybe the way to think of it. But you don't have to. I mean, you can forget about it and then at some point retrieve your liquidity again. But it's much more flexible than AMM liquidity because liquidity pool, because as I said, you are not restricted to providing tokens in a specific proportion.
Very cool. So one of the things that I'm curious about is like what kind of strategies are going to be available at first. Maybe you can't answer this question. So like if when this rolls out, like what kind of AI strategies are trading strategies are going to be available, and how do you see that process maturing in the future?
So I think in the very beginning, it will be very simple. So more or less the same strategy that our market maker bots are using now, which is like a fixed spread strategy. So basically selling, I always get that wrong, buying low and selling high. So placing buy and sell orders at a certain distance from the market price. That is like simple and easy to implement and hopefully good enough to get started. And but the beauty of this whole mechanism is that the strategy is sort of independent of the vault mechanism. So those can be worked on independently. So once we have that vault, we can start with simple strategies, but then continue working on more complicated ones. And of course, the eventual goal or the vision is that eventually everybody can contribute strategies, and we can even have like a dashboard or leaderboard of strategies, and people can like show off their own strategies, and others can deploy them and so on. And and then at some point you can also use AI. But I think AI in the beginning it will be much more simple and not use artificial intelligence.
Awesome. Attila, Raul, would you like to add on to what you think it would look like to the user experience, or about any of the kind of first strategies you envision launching?
Yes, of course. The idea is pretty much to have as simple process as we have on popular AMM-based DEXs, where you can just click a few buttons and then you have provided the liquidity, and you can then watch the yields and eventually do some yield farming as well. And of course, these strategies could have a few configurable parameters that you could change depending on your preference, your risk tolerance, and this could be all set up. Although this is all in the works and the final feature set is still not really worked out completely, but I think something along these lines could be in reach.
Thank you. Raul, did you want to add something?
Yeah. As Lars was saying, why don't you need to put the same amount of token and ADA, for instance, or token and stablecoin when you are talking about this kind of strategies? Well, if you go on providing liquidity in a current centralized exchange, that's already the experience. That's already how it is there. And why would you like to deploy liquidity, or maybe more on one side and less on the other, or the opposite? Is because some tokens have fluctuations, and this fluctuation can be higher on one side than the opposite. So maybe you want to leverage this volume on one side more and be able to have a lot of liquidity to buy the tokens if there is a lot of sell pressure, or the opposite. You want to be able to sell a lot of tokens at higher price than the average if there is a very good buy pressure. And it was kind of cool what Lars said, that we basically want to sell high and buy low, because that's what ideally everyone would like to do. But everyone says, no, I actually buy high and sell low, usually. And that's the cool thing about strategies, that you can say, okay, this is the price. If this is the price, I want to purchase at this lower price, or I want to sell at this higher price. And therefore I am happy, because price fluctuations happens every day. And if there is a good volume on a liquidity pair, you are going to be able to buy and sell. And this, if you iterate over this in a smart way, you are able to profit actually from these actions.
Awesome. Thank you very much for that. I appreciate it. So for Lars or Attila, does the smart liquidity vault mean that we're not going to be moving forward with smart swaps? Are smart swaps, different types of smart swaps, still on the roadmap for after this kind of development cycle?
I mean, of course, it sort of depends what you exactly mean by smart swap, but I mean, we identified the biggest challenge we have at the moment on the DEX is the lack of liquidity, so that people find it complicated to provide liquidity. So we wanted to address that problem first. And once we have that liquidity, then of course we can concentrate on other cool features like smart swaps. But I mean, we have to concentrate on something. We obviously have to focus our resources as well. And we also have these 3 catalyst proposals that were accepted that we need to work on. So we can't do everything at the same time. So we think this is the most urgent, the most pressing thing we have to solve to go ahead. And once that is solved, we can do the smart swap thing.
Awesome. Hey, Attila, do you have a moment to speak about the Catalyst Fund 12 proposals that Lars just mentioned? Can you kind of tell us where we're at?
I'm aware of the real-world asset token. Sorry, I'm aware of the real-world asset tokenization efforts, but I think Lars is a better person to talk about that. Do you have some updates regarding this area? I was not really involved with that effort.
Yeah, sure. So the 3 proposals were like extending or updating our Atlas framework, or Atlas Haskell off-chain framework. And the second one was providing support for non-ADA token pairs. And the third are these real-world assets. So the first 2 are relatively simple and straightforward and are full on track. And in particular, we already have non-ADA pairs now on Genius Yield, so that's basically already done. And of course, the most ambitious one is the real world assets. And even though I'm not like directly involved, I sort of get updates. And I think the most tricky part was how to actually do this. I mean, not the technology part on the blockchain. I mean, we have a lot of know-how and experience in that area to write smart contracts. But the real challenge, at least as far as I see it, was to provide the necessary legal and financial foundation, basically. I mean, how to actually do that legally in various jurisdictions to take something like property and tokenize it. And there, so that was our like first milestone, and there we have made great progress. So we basically figured that out, the legal aspects to actually how to do that. And now what remains is the actual technical work to write the smart contracts and the necessary software to actually support that. But yeah, so there we are full on track, and it's looking good.
Awesome. So for the community, that means that like non-ADA pairs have been delivered and is fully approved. So, and for our RWA, milestone 1 is under review. It's partially approved, but as Lars says, we're still working through that. And for Atlas 2.0, milestone 1 has been approved, and we are working on milestone 2 right now. So we are getting very close to the top of the hour, and I do want to respect our speakers' time, but I want to try to at least get a question or two. If you have a question you would like to ask the panel about Smart Liquidity Vault, the roadmap, or the partnership with Fluid, please raise your hand, and we'll see if we have time to get as many people as possible. I do want to do some general housekeeping. Marvin has recently left to focus on Maestro. He's doing big things in BTC, Doge, and Cardano scene, and, you know, mixed up with the BTC OS movement, and that requires his entire focus. And that's partially why we partnered with FluidTokens. Raul is a visionary, and they are kind of shaping a new vision in the next step, or in the evolution of Genius Yield. So we're really happy to have them on board, and we're looking forward to the future and the developments that are going to happen. So that's really great. Let's see, do we have any hands up? Mary, do you see any hands? I don't see anything.
Yes, I just approved.
All right.
Discover.
Let's give him a second to get up here. All right, I see him. All right, Discover, you have a question for the panel?
Yeah, no, I was just going to say, like, about going forward. Are we going to have, like, more spaces, more community? What's it? Just more community interaction?
So yeah, we'll try to have spaces a little bit more regularly, you know, as much as possible. And there's always an open line of communication on our Telegram and Discord. We do relay everything back to the team and the founders. So if you express a concern with Mary and I, we are listening, and we are actively speaking to the different elements of the team to make sure you're heard. So yes, we're going to try to have more spaces, and please utilize what's there now, because we'll do our best to answer. And I know it can be frustrating because, you know, we don't really give timelines, and, you know, there's a lot of unforeseen and difficulties that arise when you're building something totally novel. There's no libraries, there's no repos that we can go borrow things from. Everything kind of has to be built from the ground up. So a lot of the times there's unforeseens, and, you know, we don't like to get into this will launch on this date kind of race. So please have patience with us. We do try to give as much information as we can, but also at the same time try to manage expectations.
Yeah, no, that's fine. As long as everything goes in the right direction and it's communicated enough, so, you know, people know, like, you know, things are getting done. That's the main thing, I would say.
Awesome. Thank you for that. And yeah, we'll try to make the spaces a little more frequently, especially when we have something to announce. Thank you for your question.
Marcelo wrote a question on the chat.
All right. So he asked, what is the plan for early 2025? Any catalyst proposals from Genius in the next fund? I think there will be probably some catalyst proposals in Fund 14. There's not a finalized list. We're still trying to manage the workload that we have, but we definitely see some potential, and we're definitely considering that. As far as early plans for 2025, I think it's really concentrating on the Smart Liquidity Vault, getting the liquidity providing solution complete it and then improving on that. So I think that is our main focus, while at the same time balancing our Fund 12 proposals. So hopefully that answers your question. If it doesn't, feel free to follow up in the comments or go ahead and write in the Discord. But we are getting close to the top of the hour, and I do want to, Raul and Lars and Attila are very busy people. So let's get some closing words. Is there anything you'd like to add or say before we leave, Lars?
Just thank you for organizing this space, and if there's another one, I'm of course always happy to participate. And yeah, I just want to thank the community for their support. And I know as you said, it can be frustrating at times if it looks as if there's no progress, but I can assure you that we are, constantly working at trying to do the best with the resources we have, and I'm sure there will be improvements, constant improvements. Just need to ask you for a bit more patience. But yeah, thank you for attending the space, and thank you, Michael, for inviting me. It was great.
You're very welcome, Lars, and I really do appreciate you coming here and sharing your thoughts with us. Raul, do you have any last comments?
Sure. Well, first of all, I think that is a very good opportunity because we can showcase what an order book model can look like on a UTXO chains, since you cannot replicate it easier due to memory constraints on EVM. So happy for this partnership and collaboration that allows us as Fluid to explore the DEX world, and Genius to collaborate also with us and merge our minds together. So also thanks for this invitation. Always great to talk with the community.
Awesome. Thank you very much. And yeah, we're really excited to work with FluidTokens. FluidTokens is doing some great things. I've always been a big fan and user of FluidTokens, boosted stakes, rent your tappies. I love it. And it's going to be really interesting to see what you're cooking. I know you have a big announcement coming up that you teased yesterday. So I'm waiting. Attila, do you have any final words?
Yes, thank you. I would like to highlight once again the topic that you already mentioned, that Genius Yield is actually also a research project. We are building something radically new. This has never been done before, and we are exploring a lot of new things. There are, of course, some unknowns as well, but we have been busy building, and now we have very solid foundations, and we have some very exciting times ahead. Thank you for the community for the support, and thank you for the opportunity to be in the space. Thank you.
Awesome. And I just wanted to thank all our guests for joining. I want to thank Mary for co-hosting and taking such good care of our community members on Discord and Telegram. I know it's well appreciated. So thank you again for that. And just a reminder, if you have any follow-up questions or anything like that, please drop them on our Discord, and we'll try to answer them the best we can. So I just wanted to thank all our community members for showing up. We really do appreciate you, and I hope everyone has a fantastic Wednesday.
Bye, everyone.
Bye.
Thank you. Bye-bye.
Bye.
Bye.